Well, the momentum in the economy seems to be quite strong. I think it would take a significant reversal in the next few weeks of the overall economic picture, and I just don't expect that to happen. So I'm very confident that we're going to get an announcement in November, and that will lay out the plan for tapering.
How would you characterize the market's response to the decision, the statement, and the presser yesterday?
Well, the equity markets, of course, were positive yesterday. I think what it shows is that there's been a pretty careful job done by Chairman Powell and generally the Fed to signal and prepare the markets and make sure that when the event actually occurs, it's sort of a non-event in some respects. It's been priced in. And I think they've done a good job of avoiding turbulence around what still is somewhat uncertain, but getting much more certain.
Dennis, it's Morgan. Let's talk the Fed's quarterly economic projections as well, because the newest forecasts we got yesterday now from officials show U.S. unemployment, the rate falling to 4.8%. That's slightly higher than the June estimate of 4.5%. The forecast also cut the numbers for U.S. growth this year and increased inflation expectations. Is stagflation a real risk here?
Well, I think 1980s style stagflation is a pretty far-fetched notion. But they are dealing with cross currents or with mixed signals in some respects. This morning's initial claims and continuing claims really were not an improvement. They don't show substantial improvement in that particular aspect of employment. So, they're looking at an economy that has many positives and very strong positives, but still has some risks associated with it and still has some gaps between what they want to achieve and where we are today. So that's the way I see it. It's somewhat mixed picture.
Yeah, I mean, inflation, of course, being a key part of, I guess, the risks in that mixed picture. But this idea of transitory inflation, which the Fed has been signaling and communicating all year, it seems like perhaps transitory is going to go on longer than earlier anticipated. So I guess what is the definition there?
Yeah, that's a very good question. I think the definition of transitory is actually being adjusted in real time. Chairman Powell yesterday pretty much acknowledged that the elevated inflation will last longer than they originally anticipated. They're still sticking strongly to the transient hypothesis, but recognizing that how this plays out is likely to be a bit messier, and inflation in some sectors stickier than they had expected. So transient now means longer than a few months if you were to backdate this conversation, say, to January or February.
You started off our conversation by saying the momentum in the economy is strong. So what, if any, one thing would give you the most pause in terms of challenging that momentum?
Well, I think, and again, I'll refer to Jay Powell's comment, the direction of the economy, the evolution of the economy is still virus dependent. So I think the thing that would worry me most would be, a major reversal in our progress in trying to contain the virus, and therefore measures that have to be taken that really suppress demand and suppress economic activity. And you can't entirely rule that out. We're in a world where there are multiple variants that we're watching closely. So that's where I think the risk lies.